Hello traders and welcome to another video review. Today is Monday, March 3rd, 2025. Let's take a look what's going on the Forex economic calendar for today. Overnight data were not very impressive. However, we got something here for you. Company gross operating profits in Australia increased from minus 4.9 to 5.9. Big increase. ISM Manufacturing PMI from China at the level of 50.8, beating the expectations of 50.4, better than the previous reading of 50.1. S&P Global Manufacturing PMI in Russian Federation 50.2, a little bit down from 53.1. Turkish CPI is going a little bit lower than expected, 39.05. Is actually lower than the forecast of 39.90, but significantly lower than the previous number of 42.12. Now we are waiting for the manufacturing PMI data from across the Eurozone. As you can see here, the most important one is of course from Germany. It's scheduled for at least 5 to 10. And at 10 o'clock we got Eurozone manufacturing PMI, and then 30 minutes later we got the UK manufacturing PMI, and at 11 o'clock Eurozone CPI and core CPI data is scheduled for release. CPI is expected to decrease from 2.5% to 2.3%. Quite interesting expectations. During the US session, we got, of course, the ISM Manufacturing PMI data, this time from the US, scheduled for release at 4 o'clock, together with the Global Manufacturing PMI and Manufacturing Employment. At the same time, German BUBA Vice President Buch will give a speech. At 7 o'clock, we got Atlanta Fed GDP now, and at quarter to 11, data from New Zealand are scheduled for release, building consensus. So, pretty busy day, very nice bunch of data from the Eurozone, so there is something to take a look at. Nevertheless, we are, as usual, starting from the most important and mostly traded pair in the Forex industry, Euro-Dollar. The 4-hour chart of the Euro-Dollar is showing us a temporary low at the level of 1.0331, just below the technical support at 1.0373. We got the bounce to the upside, bullish engulfing pattern towards 100 periods moving average. Let me just zoom in a little bit. There you go. So definitely ABC X ABC pattern has been completed, and the major supply zone is still located between 1.0520, 1.0537. So as long as we trade below this supply zone, the outlook remains bearish. So this temporary pullback might be the beginning of something bigger. However, the momentum is still negative. The momentum is still at the level of 42 points only. So we are way below the level of 50. So in order to increase the momentum from the negative to positive, the bulls needs to break above 100 periods moving average and definitely above 1.0450, which is the temporary technical resistance. Please notice the data coming into the markets later on, manufacturing data from all across the Eurozone. The same situation is for the cable. We are waiting for the data on cable as well, manufacturing PMI. This, let me just switch to daily because this channel looks pretty nice. However, on a 4-hour, on a daily time frame chart, let me just zoom in. We got this pin bar here at the top of the move. Let me just place the resistance here on the top of the move. There you go, 1.2714. Confirmation extension to the downside. And as we were talking about last week, this is the major technical zone, the demand zone. Let me just grab my rectangle and we will do it. Yet again. I will mark it for you guys so you can see what is the situation here. As long as we are trading above this rectangle, of obviously the outlook remains, of course, bullish. So all they need to do is to keep the bears away from this zone. Let me just extend our channel. Maybe something like this will be enough. There you go. The black line here, let me just make it a little bit thicker. There you go, and very nice. This is a 1.2758. This is the level that is a 50% Fibonacci retracement of whole big downside swing. So we are quite close to this level, and of course any violation of this level might be very bullish for the at least in the coming days. And there is another black thick line here. There you go, 1.2918. This is 61% of the Fibonacci retracement of the big nice swing to the downside, right? And just between these two Fibonacci levels, there is 1.2811, 1.2834 technical resistance levels. Two of them constitute the supply zone. So momentum down to the level of 55 points. Let me just place a momentum line here, neutral level. There you go, 50.06, almost ideal. And as you can see, we are still above the level of 50. However, the momentum is not very strong at all. It's still positive, but it's not strong. So if the bulls wants to do something with this situation, they need to defend the demand zone. Please notice the fact, manufacturing PMI data from the UK later on. US dollar to the Japanese yen, and this is a daily time frame chart. Very nice situation here. First we start with daily breakout below the trend line, breakout below the 100 periods moving average. We went down towards the major technical support, tested it. As you can see, this was done with the extensively lowered momentum, 32.52. Then we bounced back up towards the immediate technical resistance, and this technical resistance has been tested as well, one and the second time. The market been trying to break above this technical resistance, 150.94, to test the 151.20 100 periods moving average. However, despite the fact that the momentum was quite strong and positive, they didn't make it. So as I said, we are still in between those two major levels in the short term. Now it all depends which side the market will break out, to the upside or to the downside. The downside is extremely important, which is why it's being defended so well. And the upside is, there still can be some kind of a pullback to the upside. It's still possible. However, please notice that just recently we got this very sharp reversal in the momentum and in the price here, and then pullback, and then another very sharp reversal towards the extremely oversold conditions, way below the extremely oversold conditions. So that might be quite interesting to see what is the next development of the US dollar to Japanese yen. Let's wait and take a look. Last but not least, the gold or crude oil, which one to pick? Gold was doing a correction. There you go. Maybe we should take a look at the gold, and we should take a look at the gold. Daily time frame chart is showing us very nice correction on gold is taking place. So we broke below this zone here, demand zone. Okay, so we got now technical resistance 2918, the supply zone starting from 2866, 2881, 2876, and now the recent technical resistance might be located here at 2862. Local low 2832 is working just as a temporary technical support, swing low, technical support. Where is the next important technical support? Is located here, exactly here, 2786, key technical support, major technical support on a daily time frame chart, just above the 100 periods moving average, 2722. Let's go back to the 4-hour time frame chart, and you can clearly see that we are below 100 periods moving average. We moved quite extensively towards the extremely oversold market conditions, and that's the reason why we are moving higher on gold right now, because there is some kind of a pullback to be made here. But immediately the bulls had been stopped at 2876, where the technical zone begins, the supply zone. Okay, so as long as we trade below the supply zone, the outlook remains bearish. I don't think we need this one here. I don't think we need this one here. Let me just remove it and let me place the temporary swing low, which is here, and this would be, of course, green line. There you go. That's much more clear, right? So this is how it looks like now on gold. Nice correction to the downside, but it doesn't actually look like it is completed. And the Bitcoin, because of the new National Reserve Act, which includes even the XRP and the other cryptocurrencies, we have a very big, strong bounce in Bitcoin and the other cryptocurrencies. However, please notice we are still below the trend line. So if we shall we adjust it like this or something like that, maybe we have a touch here, touch here, touch here, and we have now touch here. So we went up from 78,260 on February 28 towards the almost 94,966. Very nice movement to the upside. It looks like this zone here was violated, so now we're going back to test it, and it can be seen on a 4-hour time frame chart. Very big. You see the breakout to the downside, big bar, big candle to the downside, right? One big candle, breakout to the downside, pullback, correction, movement to the downside. Very big bar to the upside, very nice, very big, breaking the supply zone, and now we even managed to test this supply zone almost immediately, because we went from the extremely oversold conditions to extremely overbought conditions. Now the outlook for the Bitcoin still looks quite good after this movement to the upside. However, the Bitcoin needs to break above this trend line. Breakout above the trend line is a must for the bulls to move way higher. So please keep an eye on this current situation on the Bitcoin. Looks very interesting, looks very promising for the bulls, and we might see some sort of the upside movement very soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.